Disappointment over additional stimulus led to a big decline for stocks. I've said this from the very beginning that a much bigger stimulus package is necessary in order to really fix things. China's stock market rally has started to fizzle out after historic gains. Disappointment by investors over a lack of additional stimulus seems to be the culprit here. Now, in this video, we're going to discuss China's stock market drop, and we're going to also discuss the potential of additional stimulus measures. Now, before we continue, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. China's stock market has been on quite the ride. Since China introduced their monetary stimulus, their stock market has seen historic gains. On Tuesday, the National Development and Reform Commission held a press conference. Now, investors were looking for additional stimulus measures to what China has already rolled out, but that did not happen at this press conference. It was more of a summary of what was already introduced and some very general comments about the direction of the economy. Disappointment over additional stimulus led to a big decline for stocks. The Hang Seng Index, Hong Kong's benchmark index, declined. The CSI 300 lost 7%, Shanghai Stock Exchange slid by 6%, and basically after that press conference, after that meeting, it was a bloodbath for China's stock market. Now, some analysts and some economists are starting to worry that China will miss its 5% growth target. And I know some people that have discussed that, 5%, it's such a big number that China's already growing faster than the United States and Europe. What is the problem if they miss on 5% and they land somewhere in the fours? Well, the thing is, China's economy, the dynamics behind China's economy is different than that of the United States and different than that of Europe. And if they are to miss their target of 5%, it is something to be concerned about. Even though it is a healthy growth, it is more than the United States. The United States is projecting to grow about 3% this year. So if China grows, say they miss the 5% and they grow at 4.5%, yeah, it is still higher than the United States, but a slowing Chinese economy is still something to keep an eye on. It is a concern that should be addressed. Now, it doesn't mean that a catastrophe on the way, and it certainly doesn't mean that a recession is on the way, but these concerns should be addressed now before they become bigger issues. I've said this from the very beginning that a much bigger stimulus package is necessary in order to really fix things. To tackle core issues, you need to find a way to provide stimulus directly to consumer and to households. You have to figure out a way in order to increase domestic consumption and to tackle some of those hard to hit issues. Now, setting aside 200 billion yen, or about $28 billion for local governments that are indebted, and to help them with infrastructure, those are all good things. Those are things that are going to have a positive effect on the economy for China. And China has reiterated that they will employ a pro-growth strategy moving forward. And again, those are all good things. All of it sounds good, but that call for that big $1 trillion stimulus, I think that is what's really necessary in order to right the ship. You have to hit infrastructure really hard. You have to find a way to provide money directly to households to incentivize them. That decrease in the amount that you have to put for a down payment for houses, the money that's going to banks, and encouraging them to lend. All of that stuff is good, but you have to go big in order to really achieve the target of 5% that they have in play, and really just to right the ship. This thing that's slowing down right now, if we're talking about like a 10% 5% of GDP type of stimulus, well, that is the type of thing that I think is necessary in order to really, really fix things and not just put a band-aid on things. And it's not off of the table. It's still a possibility that something like that comes about. Issuing long-term government bonds in order to get all of this money and then really tackling those core issues. Now, the stimulus that's come out has been good. Obviously, it propped up the stock market. The market has dropped since then, but it is still up over the last month since the stimulus was introduced. But in order to revert back or for it to not really do much, moving forward, you have to hit things hard right now. And if they're going to really hit that 5% target, now is the time to act. Again, it's not off of the table. We just haven't heard it from the government yet. But there are economists, there are people within the country that are calling for it, and it is still a possibility that that much larger stimulus does take place. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.